Well, welcome everybody to the February 2014 Annuity Update Show right here on The Biz. My name is Eric Palmer. Thanks for joining us. Now, in today's show, I want to cover a couple of different things. Of course, we're going to talk rates and caps. I want to highlight an uncapped fixed index annuity. And I'm also going to talk about a couple of living benefit annuities, as these products have become very popular today. And for February, we're seeing some real traction there. Now, when it comes to rates and caps, what I want to talk about first is the 10-year Treasury. Now, in last month's series, you'll remember I was talking about it's almost getting to 3%, but of course, as the month progressed, the rate has come down. So right now, we're hovering right around 2.7%. It's actually down nearly 11 for the year. But what this really means is that we potentially are going to face some reductions in our caps or rates on an ongoing basis over the next couple of months. So if you've talked to any clients about annuities, make sure you let them know that this particular rate could affect those rates going down for them, and they're going to want to act fast and get into those products now. What's also interesting about this particular screen is the 5-year jumbo CD national average, 0.84%. So if we know that 5-year CDs are less than 1%, the rates that we're going to talk about today are really going to stand out for your clients, and make sure that you're letting them know that the national bank rates aren't even close, they're not even 1/3 of what you can offer them with an annuity. So on the fixed rate side, let's talk about multi-year guarantee annuities, and I want to highlight just the 5-year because, in my opinion, with rates being so low, you probably don't want to tie up your clients' money too long, and I think 5 years is a pretty good number. We've got Oxford Life, the income protector product. It's 2.85%, and what's really great is that 2.85% actually includes liquidity. So keep in mind, with these multi-year guarantee annuities, these rates sometimes don't include the 10% free withdrawals, so make sure you're reading the fine print. This product at 2.85, you have the withdrawal capability. Now, Athene's a nice product at 2.5% as well on a 5-year. I do want to mention that they have a 7-year at 3% in case your client's looking for that type of a rate of return. And of course, we've got Sentinel Life coming in at 3% on a 5-year as well. But keep in mind, on the Sentinel product, they don't include the liquidity. So if you want to add that, it's going to bring the rate down just a little bit. But these are the players on the 5-year multi-year guarantees, and these products compete very well against those 5-year CD rates that I just mentioned before. So let's talk about fixed index annuities, caps, and rates. Now, there's a couple of different products to talk about here, and there's some premium bonuses that I want to highlight. So let's first start with the short-term index annuities. We've got the Athene accumulator. It's a 5-year at 4.5% with an annual point-to-point cap. So that's a really strong cap on a 5-year index annuity. Short-term, your clients are in and out. They're not looking to tie up their money very long. This is the product to turn to. Now, of course, you hear me talk about this every single month. It's the 7-year from Genworth. It's one of my favorite index annuities that are in the market today. It's only a 7-year surrender penalty. It's got a 107% guarantee behind it. But right now, we're sitting on a 6% annual point-to-point S&P 500 cap. And with that cap max strategy, you have the potential to get as much as 32% in the next 3 years if your client keeps rolling it using the cap max strategy. Now, when it comes to premium bonus, I want to talk about North American. They've got the Retire Choice 14. It's up to 10% premium bonus, and this product has a return of premium. So there's a handful of bonuses out there today. There's a couple of 10%, but very few, if any, have return of premium. So North American, in my opinion, is really going to stand out on the 10% premium bonus category because your client has that liquidity potential with the return of premium. Now, Forefront index bonus is the 4-cent spending product. I've chosen this one to highlight it as the last one on the caps and rates because it's got a nice combination of both. They've got a 7% premium bonus that's added to your account value, but they also have a 5.5% annual point-to-point cap on the S&P 500. So when you're looking for real accumulation capability and a little bit of a premium bonus, this is going to be the product to turn to. Now let's talk about the uncapped strategy, this uncapped product that I mentioned at the beginning. And this is one's coming from Forethought Life. It's called the Income 150 Plus. Now, this product was built to not just be very strong with accumulation using this uncapped strategy, it also is one of the best income products out there today. If you're looking for income between years 1 and 6, this one's really going to stand out. But what I want to do for the February show is I want to really hone in on this uncapped index strategy because in my opinion, it's the best one that you're going to find in the market today. Now, first thing to note about this particular strategy is that it's different. Everybody has uncapped strategies today. They're starting to emerge more and more, but a lot of them are very similar and very few are volatility controlled. So what does that mean? Well, with an uncapped index strategy, if it's tied to the S&P 500 only, then that's not always going to yield positive interest. And in fact, you're going to be tied to the volatility of that one particular index strategy. What they've done with the Barclays Armor 2 is they've actually incorporated a multi-asset allocation strategy. That means there's 6 different asset classes built within this one index. We've got developed equity, we have emerging markets equity, there's commodities, gold, bonds, and cash. So now we have an uncapped index strategy that's made up of all of these different asset classes, making it easy to control the volatility when compared to a single index. Okay, so when we're taking all of these into consideration, what the insurance company is actually doing is on a daily basis, they're sweeping some money into cash to try to maintain that 7% strategy, but also they're taking the top 2 performers on a monthly basis and allocating your money over there. So it's almost like they're actively managing inside of this index, which makes it, again, one of the most unique indexes that are available on an annuity today. What's also important to note is that they have that momentum-based strategy that's striving for a higher return. If we look at the history of this, or we actually take the capability or the asset classes in this product and we place it over time, we would see that over the last 11 years it would have averaged somewhere around 8%. And actually, we have a little bit of a chart that's available. So if you want to get your hands on this information, you can contact us right here at The Biz. It's info@thebiz.tv. Just send me an email. We'll send you this chart. But I pulled this piece out because it's really interesting. With this particular Barclays Armor 2 strategy, it's a 3-year rolling average. This means it's a 3-year index. Every 3 years, they're crediting the interest. But we took a look at the performance over the historical, and we see that on the lowest end, it yielded a 2.54% return. On the high end, the 100th percentile, is 14.6. If I take the median, I'm at 6.5. Now, at 6.5 in the median, what's interesting is that's almost 1 to 1.5% higher than the highest caps that are in the market today on index annuities tied to the S&P 500. So on average, we think we're going to get somewhere around 6.5, low end 2.5, high end over 14. This is a powerful product to be showing your clients. So remember, when you're looking at uncapped index strategies, this is the product to turn to. Now, I want to end the show today talking about these living benefit annuities because, as I mentioned before, for February, it's really going to start to become very popular. We see these emerging in the market more and more, both on life insurance and annuities. So when it comes to living benefits, make sure you know the next 2 products that I'm going to talk about. First, we have the Forethought 4Care product. Now, what's interesting is this product was originally designed for banks, but it's become very popular in our independent channel, and they've really made some enhancements to this product to make it one of the best long-term care annuities that are available today. What I like most about this product is that the cost will never invade principal. Now, what's really important about that is that we have an interest rate guarantee in these long-term care annuities, but there's also a significant amount of cost to carry these living benefits. What's nice about this product, again, is that you won't lose principal due to the internal charges or costs associated with these living benefits. So your client's going to appreciate the fact that their money's not going to go down, and they're going to have a 2 to 3 time multiplier on that single premium as the pool of money that they get to access for these long-term care instances or events. There's a 0-day elimination period for home health care, and it's an over 92% approval basis on our simplified underwriting apps. Small app, very easy process, easy to do, and as I mentioned before, over 92% of these things are getting approved. So when you're looking for an actual long-term care annuity, look at the Forethought 4Care product. I promise you it's the best one in the market. Now, I also want to highlight the Athene Benefit 10. I'm going to wrap the show up with this one today, okay? So what's interesting about this product is it's really powerful with living benefits, but it also has a lot of other features. So when you're looking to sell an index annuity to a client that kind of covers all of the bases, this is really a great product to take a look at. We've got the income protection. It's an 8% simple for 10 years, 5% simple for 11 plus. It has a 55-year roll-up, one of the longest roll-ups you're going to find for an income benefit in the market today. But the care protection really stands out. They take all this accumulation you get inside that benefit, and they'll pay you 1.5 times the income if you can't perform 2 out of 6 activities of daily living. It provides that coverage for home health care, and they'll pay you out that entire benefit over the course of 5 years if you're confined to a nursing home. So you get all this powerful growth paid out in care protection if you end up needing it at the end of the day. There's also a nice enhanced death benefit feature. It'll pay you out a lump sum of 70% of this benefit base, or it'll pay you 100% of the benefit base if you take the income or the death benefit over the course of 5 years. So again, it covers all the different directions that your client may go in when it comes to annuity premium. They're going to take income, they're going to need that to cover some health costs, or they're end up at the end of the day going to want to pass that on to their beneficiary. This product covers all your bases. So if you have any questions about what we covered in today's show, you can send us an email. It's at info@thebiz.tv. You can go right to our website, www.thebiz.tv. You can contact us directly through the website. We'll send you some charts, product details, or anything that you want to know from today's show. So thanks again for joining us here for the February 2014 Annuity Update Show, and I'll see you next month.